Let's get straight to Megan Casella in Washington with the fallout from President Trump's tariffs, Megan, and what we're hearing, if anything, from the White House this morning.
Hey, Sarah. Good morning, guys. So clearly a far more sweeping plan than really any investors, any analysts had been expecting, what you just described as the worst case scenario. At least a 10% tariff on nearly every country in the world, starting within days, and the rates only going higher from there. And there's really nowhere to escape the tariffs. Take a look here. 34% on China, 20% on the European Union. All of these numbers, by the way, added on top of any tariffs that were already in place. And then look at places where companies might like to move. 46% on Vietnam. It's not on this screen, but 49% on Cambodia as well. So really nowhere to go for safety here. By my count, guys, this is about 10 times the value of imports that will now face tariffs versus in the president's first term. It was about $380 billion then. Now it's nearly all our imports at $3.5 trillion or perhaps higher. So we'll have to see a lot of that impact. And Sarah, I know one of your biggest questions this week has been whether these are negotiable and what the White House is thinking from here. I can tell you, as far as this morning, what we're hearing from officials, the signal they're sending is that these are not negotiable. They are not looking to strike deals right now. White House Press Secretary Caroline Leavitt was just on CNN this morning saying the president is firm in his approach and that if countries had wanted to negotiate, they had 70 years to do it. A White House official also told reporters yesterday that this is not a negotiation, it's a national emergency, and that cutting tariffs now is not enough. That ignores the decades of trade barriers that have been in place. I'll also leave you guys with just one final example. Israel is one country, obviously a very close U.S. ally, that cut all of its tariffs this week ahead of this announcement. They still saw a 17% reciprocal tariff put in place yesterday. So the biggest question from here is exactly how countries start to retaliate and then whether the White House looks to strike any deals. But the posturing at this point is that they're just not open to it at this point. Guys?
It was what I was going to ask you, and I am surprised to hear it because a lot of these rates are very high. And I guess the question from here, Megan, is just what the pain threshold is for this administration. I know they say they're not watching the stock market, but we're down 4.75% right now on the NASDAQ. And the economy, like, OK, there's an adjustment. We could have a recession, but I'm not sure that they would want something deeper than that.
Yes, I think you're right. I'll have to head inside and see what network they're tuned into this morning in upper press. Sometimes that gives us a signal. They're going to say that they're not watching the markets. They've been saying consistently for weeks now that that's not what the president cares about. And of course, they did roll out this plan knowing full well that it was going to hit the markets, knowing that there was a lot of concern out there already. They didn't give too much time, too much lead time here. April 5th and April 9th are the two dates that these start to kick in. So will any come off before then? It doesn't look likely. There's not a lot of time. Maybe they take effect. We see even more fallout, and then there's a deal. That's what we have to see, is just how much pain they're willing to take.
Yeah, well, Megan, I think there's a lot of investors who hope and expect there will be some deals. I think it's very interesting your reporting indicating at least at this point the posture is no. I did want to come to Canada and Mexico if I can. Obviously, as shocked as perhaps some are by China being at 54% now or Vietnam at 46%. Was there something, was there a surprise that Canada and Mexico didn't take anything more?
A little bit of a surprise, but I would also say that 25% is still really significant. So I think they decided here to just keep the status quo. The 25% fentanyl tariffs remain in place. The USMCA compliant goods continue to remain exempt. So it is also interesting that of all the trade deals that the U.S. has, we have them with South Korea, for example, with Colombia and South American nations. All of those are sort of thrown by the wayside, except for the president's own trade deal, the USMCA. They're continuing to abide by allowing those exemptions to remain in place. There is some text within the executive order that says if the president ever decides to remove the fentanyl tariffs at the reciprocal level for those two countries will be just 12%. So I think the White House actually decided, by reading between the lines there, that the 25% was the more aggressive move, that a reciprocal rate would only be 12, about half that. So they kept the higher rate in place while saying we still need to see more on fentanyl and maybe on any number of issues that they're negotiating bilaterally.
Megan, I got another question, on chips. We were talking to Jim this morning, semiconductor chips, just trying to understand what has been potentially exempted. Can you go through some of that? Is NVIDIA, for example, and the semiconductor chips that are manufactured in Taiwan not going to be subject to those tariffs?
That's absolutely right. There are just a few key items. It's pharmaceuticals, semiconductors, copper and lumber. Gold is on that list, energy and some minerals as well. All of those exempt from these tariffs. But I will caution that's for the moment. A White House official told reporters yesterday that the reason those goods are exempt is because the president is looking at issuing some sector-specific tariffs on them. So copper and lumber are already under a national security investigation. They told us that they expect that to wrap up fairly soon. So there could be a separate sort of tariff on copper and lumber. Pharmaceuticals and semiconductors not currently under investigation, so it might just take a little bit longer. But they say the reason they're not getting hit with reciprocal tariffs is so that they can later do sector-specific tariffs. We'll have to see what exactly that number is. It's a reprieve for now, but it could be temporary.
Yeah, that's all we need. More tariffs. Megan, thank you.